Great. This is probably a very impromptu live stream, but we'll be okay. We'll just get going. One of the things that we want to discuss is something that I've just seen a couple of minutes ago, and then we'll actually just go through the thoughts that I have, go through the document itself, and hopefully we'll be able to see something of importance by the end of the stream itself. So, as the title just tells you, we want to talk about the implications of the central bank digital currency. There is a talk of having it come to Kenya. In Africa, we already have Nigeria, which has the e-naira. There are several videos that have been done on the same, especially by a YouTuber called Fisayo Fosudo. And I will share those in the comments. And first of all, what I want us to just do is to go through the document done by central bank so that we can be able to now dissect it as we read along, because as I go through it, you'll be able to see my thoughts as well, and we can be able to just go through the same and see what's next. So this is a paper that just came out today. It's the discussion paper on central bank digital currency. It's done by the Central Bank of Kenya. And I want us to actually go through it. It's not a very long paper, but the thoughts that we'll have around it will actually really help us to understand a bit more on what exactly we need to do in this case. And Master S says, thank you. I was just about to read the paper. I have gone through it just a few minutes ago, then looked for another document that I've actually cited. We may go through others, but I'm hoping that this will be an interesting discussion. And if you'd like to actually come onto the stream itself, what I can actually do right now is just copy this. And if you'd like to join in on the stream, you can actually be able to do that. So that's a link to actually join the stream. But that won't happen now. We can actually do a Q&A as we go on. So on the first thing that this paper actually talks about is on, and I'm hoping I can be able to actually do a full screen of this. Let's see if I can be able to zoom in. I wish I could be able to zoom in. I don't know how to zoom in. So what we can actually do right now is go through the executive summary and allow me to just open it. I may need to just open it so that we go through it and read through it. And this paper itself, it shows 28 pages. It's 28 pages. But we'll actually just go through a few of the thoughts that I have, and we can be able to learn a lot on what the bank wants to do, because this actually affects your money. It affects my money. So we're going through the executive summary, and it just talks about and says rapid technological innovation is ushering in a new era of public and private digital money. Just 1 second so that I can be able to actually just see the comments when they come in. That's what I want to do right now. Let's see. Just going to my channel and live, because as I read this, I won't be able to see exactly what you guys are saying, but it would be good to actually see the same. So just that. So good. I can be able to actually see what you guys are saying in the comments. So rapid technological innovation is ushering in a new era of public and private digital money. The transition to digital payments has been accelerated by the proliferation and easy access to mobile devices, as well as the emergence of fintech firms that constantly innovate new products to run on these devices. New digital currencies have emerged to facilitate payment transactions. They include electronic money, and in this case, we're talking about M-Pesa and Airtel Money and Tcash, and cryptocurrency, Bitcoin, Ethereum, and all the other 10,000 cryptocurrencies. Stable coins, we are talking about USDT, BUSD, we have UST as well, and other stable coins. There's there's a GUSD, there's PAX USD, and central bank digital currency. So the most significance of central bank digital currencies at the moment is the digital one, which I think has also been mentioned in the document itself. But in Africa, we have the e-Naira. And Kenya is thinking about coming up with the digital shilling. Central bank digital currency, otherwise known as CBDC, is a digital currency that is issued by the central bank and intended to serve as legal tender. So before we even go through a lot on this, I want you to understand the reason why the bank is, or the central bank is actually doing a central bank digital currency. One thing that we fully understand as Kenyans is we rarely carry cash. And just a few years ago, we changed and we had new notes. We have the new 1,000 note, and these notes look very nice. But the truth of the matter is, there's actually more money being transacted in e-money, which is M-Pesa and Airtel Money and Tcash. But if you just hear me talking about M-Pesa, it's of course because that's a currency that we mostly use. And just before we go on with this document, e-money is the one thing that is most likely going to be affected by this, even before we go very far. But let's actually just continue before I get ahead of myself and start dissecting this document. So, following the outbreak of COVID-19 pandemic, digital platforms have emerged as important financial inclusion tools across the world. To reap the full benefits and manage risks, policymakers are looking to step up. Now, before we even read the next sentence, one thing that you need to understand is, as we speak, Kenya is currently number 3 in terms of percentage of population using cryptocurrency in the world. We are currently number 3. So I'll give you the top 5 because this is a stat that I actually saw yesterday and it was really interesting, and I actually shared it with people. So the top 5 countries by percentage of population that owns crypto: number 1 is Ukraine, 12.7%. Number 2 is Russia, 11.9%. In fact, Russia just started regulating crypto so that any crypto gains that you gain in Russia, you will be taxed 30%. So that is something that just happened just this month. And then number 3 is Kenya at 8.5%. So 8.5% of Kenyans own crypto. Then USA, 8.3%. India, 7.3%. So if you thought that Kenyans don't know about cryptocurrency, people know, people own it, they just don't say it. Then the top 5 by number of crypto holders, the first is India at 100 million because, of course, of their population. The USA, 27 million. Russia, 17 million. You have Nigeria at 13 million. You have Brazil at 10 million. So that was just a start that I needed to throw in there because it was important. So central banks are exploring the possibility of rolling out CBDC solutions to meet their future payment needs in a digital economy. So one thing that you need to understand, no matter what the CBK says about cryptocurrency, no matter what policy shows up about cryptocurrency, you need to understand that money itself is going digital. There is no turning back. That's something that you need to understand first of all. So the move towards digital money is something that will not stop. That's something that you need to get. The next thing, uh, it says, according to a 2021 survey of central banks by the Bank of International Settlements, BIS, and that's a document that I actually just downloaded, 86% of central banks are actively researching the potential for CBDCs. 60% were experimenting with the technology, and 14% were deploying pilot projects. That is very interesting to actually know. So, one thing that you need to get is, even though banks and central banks may be seen as being against cryptocurrency, one of the things that you need to get is they are actively researching the potential for CBDCs, because every single government will want to control money in their economy. So, cryptocurrencies as a whole, and the reason I'm actually going through this is because this is really important for you to understand my thoughts as well. Cryptocurrency as a whole essentially is decentralizing currency. CBDCs, by their very nature, is centralized currency. So even when you see in the news, and you will hear people saying in the news that uh, the central bank actually wants to do a cryptocurrency, the truth is that's not it. That's not exactly what they're doing. They're just looking at how can they be able to monitor the way money is flowing in the economy, and how can they be able to control it even better. That's exactly what is going to happen. So let's read on. The Central Bank of Kenya has been at the forefront of monitoring these developments. This is critical given that policy choices among central banks globally should reflect the specific jurisdiction requirements and circumstances at a point in time. This has informed the development of this discussion paper, which is centered on the following key focus areas. Number one, Kenya's payment landscape. So, the national payments systems in Kenya are classified into two categories in terms of values and volumes processed. So, the first has to do with large value payment systems, including the Kenya Electronic Payment and Settlement System, the East African Payment System, the Regional Payment and Settlement System, and Society of Worldwide Interbank Financial Telecommunication, also known as SWIFT. These are used to process domestic large value payments, cross border payments, and remittances. So, what this means is these are interbank transactions. That's what the first part is all about, interbank transactions. So, this is to do with from Bank A to Bank B within Kenya, from Bank A to Bank B in East Africa, in the region, COMESA region in Africa, and then the SWIFT one handles the whole of the world. So all these developments are something that the central bank has to keep in touch with, because anytime that you're trying to transact between bank and bank, the customer is the one who's paying. And the reason why cryptos have actually made it really fast, and they're actually doing really well, is because bank transactions are expensive. Okay. So the banks themselves have to look at how can we be able to go and arrest this situation. Because as you have just seen from the statistics that I've actually just shared, In Kenya, we are number 3 in the world in terms of adoption of cryptocurrency. So the banks themselves, they clearly can see the writing on the wall. Banks make money anytime that you transact. So, and even when you're just putting money in the bank account, you're charged every single month for ledger fees. Whenever you want to check your balance, some banks charge. When you want to withdraw at the ATM, you're charged. If you want to withdraw to your your mobile wallet, you're charged. If you want to put into your bank, you're charged. If you want to transfer from one account in one bank to another, you're charged. So this is something that banks will not take lying down if you're moving your money from your bank to cryptocurrency. So Shesmik says this is really big. They're going to have total control over every penny flowing in the economy. That's one of the thoughts that I've had as well. Because if you actually move, because let me just talk about this. If right now you have cash in your house, the bank and the government can probably not know about it. That's the reality. But if we move to a CBDC, then the government knows every single time that you receive money, they know. And you can never go and lie to them that, oh, I did not receive money, or I do not have money, because they can be able to actually monitor it. So, yes, from the paper, and we'll go through the paper and we'll finish the paper. From all this, yes, the idea behind it is they need to compete with cryptocurrencies, because whether they like it or not, people will continue being educated about cryptocurrency. And that's the reason why even this channel currently exists. It's because of the fact that I was in the banking sector. I was a banker. I know how banks make money. And in essence, I know exactly how the government makes money. So if you are an individual and you want to be your own bank, then crypto actually is the solution. And of course, just as has been pointed out, taxes will be taken automatically. Yes, just the same way as right now, if you transact in e-money on M-PESA, the amount of money that you're being charged for the transaction, you already are paying tax on that. Okay. And in this case, you're not the one necessarily being taxed. It's the Safaricom being taxed and then submitting that, because that's part of their commission. But understand that with introduction of things like Pochi la Biashara, things like that, that is also a way of the government knowing exactly how much money you make. Those are my thoughts. So let's move to the next thing. So that's the first thing. And we were talking about large value payment systems. So these are used to process domestic large value payment, cross-border payments, and remittances. While strides have been made to reduce the cost of cross-border remittances in Kenya from over 15% in the last 10 years to 8% at the end of 2020, the cost is still beyond the sustainable development goal of 3% by 2030. So banks make money. So let me actually give you a good illustration of how banks make money when you do an international transaction. So say you want to send money to a country like Canada, where you're sending your CAD or you're sending USD, for instance. And Canada is just one example. So if I have my money in bank A, and I'm not mentioning any banks because this is not sponsored by any bank. So when you have your account in bank A in Kenya, you will need to send that money. That money first goes out to the central bank of Kenya. And then from the Central Bank of Kenya, it can go in different directions. Depending on the currency it is, it may go to Germany if it is the Doge. It can go to somewhere in Europe if it is a euro. All this are ways that the money actually goes before it gets to its intended place. So this is what happens. You have your Kenya shilling here in Kenya. It needs first to be converted to the currency of what is known as an intermediary bank. So that intermediary bank may be sitting in the US and you're sending money to Canada. So money comes from Kenya, goes first to the US, and then that intermediary bank now sends that money to the central bank of Canada, whatever name it is, and then that bank now, the central bank now sends that money to the bank account of the person that you're sending to. And that is one of the reasons why you are charged something like 2,000 shillings to do a SWIFT transaction. Because all these people that are in this chain, they have to be paid. All these transactions that are happening in these intermediary institutions, they have to get paid. So one of the things that you need to understand, and someone has just said this, crypto is the way to uplift the life of the common man. Honestly, this was not supposed to be a video about crypto, but CBDCs are a response to crypto. So if I wanted to send crypto, for instance, in this case, to someone in Canada right now, all I will just need is their wallet address. And with the CBDCs, when they come, and if they come in the way that I think that they will have wallet addresses similar to the way we currently have crypto wallet addresses. So someone can be able to send money from Kenya to Canada in less than a minute and be charged less than $1, depending on the currency, depending on the network that you're using. If you're using the Ethereum network, it will probably be higher. But if you're using other networks like Tron or whatever, all these other networks, you will be charged much less and the money gets there immediately. So what is the central bank trying to do? They're trying to make sure that if they have the central bank digital currency, then they do not need to charge you as much when you're doing these transactions, because they will not necessarily need banks in the middle of these transactions. So what will most likely happen when this CBDC goes live is that you'll probably move your money from M-PESA, and I've seen it in the document and we'll go through that. You'll probably go to your wallet, M-PESA wallet, and then transfer money to your E-shilling. And this is the name that I'm actually giving it. So CBK, if you use my name, E-shilling, just pay me something small because I'm actually the first person to mention it. So if you use from M-PESA to the E-shilling or the M-shilling or whatever they decide to call it, if you send money here, number one, you already know, the government already knows how much money you've put here. But the interesting thing is now you can actually be able to send money to someone else, and I hope that this thing will be free. If it is, then M-PESA dies. Okay, are we together? If the CBDC transfer between users is free, then M-PESA dies, because the government will actually push the CBDC more than it is pushing M-PESA, which currently is its biggest tax payer, but that is beside the point. Let's go through the next point. So in order for them to be able to reduce the cost to 3%, then they need a central bank digital currency. So the second category of payments in Kenya is called low value or retail payment systems. This includes mobile phone money transfer services or e-wallets. This also includes automated clearinghouse, card payments, PesaLink. The Kenyan domestic payment landscape is comprised of public and private sector players, including CBK and payment service providers. The ecosystem is a mix of cash and digital currencies, including mobile money. Have you seen that distinction there? digital currencies, including mobile money. So, one of the things that you need to understand about M-PESA is that M-PESA is not the Kenyan shilling. Here it's called an e-currency. But in actual sense, M-PESA in itself and the way it actually works is the same as having a stable coin, only that it is a centralized stable coin, and the Kenya shilling is pegged to the value. The M-PESA Kenya shilling, the SMS in your wallet, is equal to having uh, a Kenya shilling a note. You understand, and I hope you understand that the SMS that you have on your phone is not real money. It's just an SMS. But because we have decided that an SMS from M-PESA equals money, that's a reason why that SMS has value. But that is a discussion for another day. Yeah. But it is an interesting conversation to actually have. So let's go to the second page and we can be able to actually see this. So one of the things that you can actually be able to do, just place in your comments, let me know what your thoughts are on the central bank digital currency. And I'm glad that you're all here watching. If you are watching, just place your comment, place your question, and I'll be able to share it on the live stream as we go on. So globally, new technologies and innovations, including distributed ledger technology, decentralized finance, which is an animal on its own, and it's going to transform lives as we go on decentralized finance. And please make sure that you are subscribed on the channel, because I'll make sure that DeFi videos are coming in very, very soon, because it's an exciting place where money is being printed for people. It's very exciting. And embedded finance are at early stages of implementation. CBK continues to monitor these developments closely to ensure Kenya's payment system remains relevant and fit for purpose. So, CBDC's opportunities and risks. This is one of the biggest things. So, central banks exploring CBDC issuance cite different objectives, including mitigating systemic risks, financial stability, and payments resilience, enhanced cross-border payments, customer protection, promoting innovation, and financial inclusion. Now, believe me, I'm not going to pretend to understand all these things that they're saying here, but here are my thoughts. The central bank digital currency is the way of the government finding out how are people transacting in the economy. And for the government, it's a good way for them to have everyone on the CBDC, because they can actually monitor things real time. When the government actually meets at the middle of the month and they want to change something, they have to quote unquote guess what is going on. That's the truth. Because many people don't have their money in the normal system. Juakali people, unless now it is M-PESA, most people don't have the money in the formal system. So the CBDC will be a way of the government getting everyone on taxes. Believe me, that's a first reason why the CBDC is a good idea for the government. And I'm saying a good idea for the government. You have not heard me say this is a good idea for us as citizens. Let me share this. I fear taxes on us who we are into crypto. They might rise so bad. Don't worry. Not yet. Not yet. And the answer has actually been given here. They'll only be able to tax crypto when you convert it to fiat. When you convert your money from Bitcoin to Kenya shilling, then you can be found out. Because if it goes the way we are thinking it will go, then you will need to convert your USDT, your Bitcoin, your Ethereum to the E-shilling. And believe me, that's the word that we will be using here. So don't worry too much about taxes on crypto yet. They will come, but don't worry about it too much. Conversely, there are significant potential risks with CBDC issuance. This, for me, even before I read what they are saying about CBDC issuance, one of the biggest risks that comes with the CBDC is the fact that, apart from the way now printing has to physically happen of physical money, someone in treasury can be able to actually add zeros into the supply of digital currency. And believe me, that will happen more often than not once we adopt this, because now it becomes easier for the bank, and I'm saying this central bank, it will be much easier for them to introduce new currency into circulation, because they don't need to actually go to Delarue and print more money. They can actually be able to do it immediately because it's on the system. And the worst part about this is the way it has actually happened in the US is that between 2020 and 2021 end, 50% of the circulating money in the US economy was printed. And this is not what was just circulating at that time. This is from the very first time that the USD actually started. So this poses a risk for us as Kenyans because of inflation. If the Treasury, if the Ministry of Finance decides today that we need 10 trillion added into the economy in terms of the e-shilling, they can actually be able to put those zeros and someone authorizes in the office. And that has already happened. So what that will do to the money that you currently hold in the economy, inflation will shoot up. Okay? So let's look at other risks, because the first risk that I actually saw was that one. So this include financial exclusion, because understand this, for the CBDC to work, then you actually need for people to have smartphones, or you need for people to actually adopt the CBDC. If people refuse to adopt CBDC, they are excluded. That's the first thing. Then technology risks, and this is just exactly what I was talking about. There are people who are at central bank or at or treasury who have no idea how to be able to handle a digital currency, and this will actually happen. The next thing, competing with bank deposits. This, for every single bank, this is the biggest risk. Because what can happen? The government can afford to actually have people transact on its system for free. Leave alone M-PESA, leave alone banks, come onto our system and transact for free. How many people who don't understand what I'm actually bringing out right now will hear, because when they do the marketing, this is what they'll talk about. They'll talk about the fact that it is free to transact on CBDC. So move your money from your M-PESA, move your money from your bank, move your money from your mattress and bring it to the CBDC, because you can transfer from John to Paul for free. You can actually be able to hold in your wallet 1 million shillings, 5 million shillings without any issues, because understand this, the government will know exactly what kind of a person you are, what's your financial level. You can never, ever file nil returns again. That's what is going to happen when they introduce CBDC. It's a truth, because we know our government. We know exactly what they are going to do. If You get onto the system, you transact, because you see, one thing that we have taken for granted for quite a while is the fact that at the moment, for most citizens, they are able to transact the way they want and their business money all on M-Pesa and never pay taxes. We've taken that for granted for a very long time because there is no law that currently compels Safaricom to actually show the financial records of citizens. We take that for granted. When you move from M-Pesa to the CBDC, then in essence, and this will be in the terms and conditions, whether you like it or not, the government has authority to actually tax you based on the transactions that you have in your wallet. My hope is then we can change from the income tax, the way we actually do it, tax people for transactions. That makes sense. Say 10% or 5% or whatever, 2% on every single transaction that people do, and that's my tax. And never talk to me about tax again, so that I can incorporate that. But we're getting ahead of ourselves. Let's talk about first how this will work. Another risk, because you understand here that competing with bank deposits here, put M-Pesa as well. Safaricom currently makes a lot of money, and its bulk of its money from M-Pesa. And that's the reason why Safaricom will never let go of M-Pesa, no matter how much noise Airtel makes. Safaricom can never let go of M-Pesa because people are transacting on M-Pesa. And you and I transacting on M-Pesa actually gives them all the money that they are making. So what may happen is it will undermine their deposits, because you remember in 2020 when Safaricom actually increased their bank deposit or their wallet deposits to 300,000, you know what that did? It forced the banks to actually tell you that movement of money between M-Pesa and bank to become free, because they realized that people were actually storing their money on M-Pesa and never taking their money to the bank. So banks are already being fought by M-Pesa, and I'm using M-Pesa, of course, we're talking about digital money. Banks are already fighting for deposits. When I was a banker, that was the first thing that every single day you'd be woken up thinking about: deposits, deposits, because banks cannot operate without deposits. So what will happen? Once money is moved from banks, it's moved from M-Pesa, it's moved to the government. So now what the central bank can actually be able to do is, with this money that they hold currently as their deposits, they can actually pick some of that money and do projects with. Remember, this is digital money. Do you know that? This is digital money. So the central bank will actually be a retail bank and stop being a bank of banks. That's what will happen when the CBDC comes in. You need to understand these things so that when you hear about it, because we have a few months to actually go through with this. So the next thing, hampering monetary policy transmission. Now, this should actually not be a risk for them because, like I've just mentioned, monetary policy will be easier to manage because they exactly know how much is in circulation. Anti-money laundering, this is a risk to them because, like we have just been saying, people will not want the government to know exactly what they're doing, and forcing people will actually do that. So, combating the financing of terrorism, AML and CFT, and data privacy, balance, and infrastructure costs. So, the biggest risk here is on data privacy, because you do not want the government to actually come in and tax you based on, thank you, Shez, for the super chat. Thank you very much. You do not want the government to actually tax you or to look at your balance. The central bank and the government should not be able to look at your balance. That's something that should be very obvious. It should not happen because your money is your own secret. And banks in this case should not be telling you, where have you gotten this money from? Where are you taking this money to? And hence why we were saying crypto is a solution. So let's go through this. So an overview of other jurisdiction CBDC projects, and allow me to just gloss over this. This is just a look at the different countries where this is a similar thing is happening. We have the Bahamas Sand Dollar Project. We have the Eastern Caribbean's D-Cash. We have Singapore's Project Ubin. You have the Bank of England is exploring CBDC. You have Sweden with the e-krona. You have Canada's Project Jasper. You have BIS Project Dunbar, which is for Australia, Malaysia, Singapore, and South Africa. They've actually come together so that they can see how they can do international settlements. And then you have the BIS product Mbridge, which was a prototype that people could be able to use, that Thailand and UAE and China were modeling against. So that's something that you can be able to look at. So just as we go to the next one, the Project Mbridge showed potential to shorten cross-border transaction time from 3 to 5 days to less than 10 seconds. And then the platform cut the overall cost associated with international payments by half. That is still good, but not good enough. That's what I can tell you. For free, it's not good enough. So next, you have the digital one, which is from China, which is the biggest rollout. So China has actually entered into the next phase of the digital yuan rollout, targeting to make the digital yuan available to international visitors during the 2022 Beijing Winter Olympics. In fact, was it last week or it was earlier this week when they actually officially launched the digital yuan? And allow me to tell you, this digital yuan is the reason why China banned Bitcoin mining in their country. The Bitcoin mining ban in China had nothing to do with the resources that are being used or the environmental impact of Bitcoin. It had just to do with the country wants a control of the money and the economy, and Bitcoin poses a threat to that. So the next is the digital Turkish lira. Singapore is doing an assessment of a retail CBDC, so something to be similar to what we have as M-PESA, but now controlled by the government in Singapore. Canada's evaluation of monetary sovereignty for the CBDC, where in December of 2021, the Bank of Canada published its evaluation of the monetary sovereignty rationale. And the US Federal Reserve research on CBDC. The US also wants to come up with the e-dollar and India's digital rupee. So the question on everyone's minds is, how will the CBDC work according to the central bank in Kenya? So these are the things that the central bank is considering. The fundamental principles require that central bank issued currencies and private digital currencies should incorporate core features. This include ease of use. The use of this currency should be easy to do for everyone. The same way that M-PESA is extremely easy to understand, the CBDC, and of course, when this is rolling out, there will be tutorials on the channel when this actually comes out. And I hope that we can be able to get someone from the central bank to talk with about this. And the next is on low transaction costs. That is really important in order to make this work. If you're doing a transaction of 100 shillings, it should be cheap to do that transfer. Convertibility. And here we are talking about convertibility from CBDC to e-money, which is M-PESA, T-Cash, and Airtel Money, to money in your bank account to actual cash. It should be easy to do this conversion. And you'll probably see if it rolls out in the retail space, then you'll probably have retail agents, similar to the way we have for M-PESA, will actually be doing loading and unloading of CBDC onto wallets. So that's one thing that is probably going to be a good innovation. People will make money, but of course, we've talked about the other risks involved. Instant settlement. This will require that the bank, central bank, and in this case, the Kenyan government needs to have a system similar to the Safaricom system, where you can actually do your transaction and in less than 5 seconds, it gets to the other person. That is really important. If you don't have that, then this will be dead at the start. And it's really important because this the Safaricom system is one made by Huawei in China, and it probably be the same system that the Kenyan government will actually choose to do because it actually incorporates the same things. The CBDC is one that will encompass replacing M-PESA. So that's the first thing. Then continuous availability. For the CBDC, you cannot have downtime if you're now dealing with the retail market, especially. You cannot have money or the system down, this system of use, it cannot go down. It always has to be online. That's really important. And that's a consideration that's there. And then you have a high degree of security, resilience, flexibility, and safety. As is with mobile money, the focus of CBDC innovation must be on functionality and the problem it resolves for the people rather than the underlying technology. Not exactly. The focus of the CBDC must also be the technology. And we need to actually focus on the technology as well. A good CBDC would be one that actually uses blockchain technology, because that's where we are going. It cannot be made on the normal systems that we have and the normal technology that's currently available. Additionally, in order to validate the system, this being a centralized system, then the central bank and the government themselves have to come up with a way of validating transactions on the system. This means probably doing what is similar to what people are doing in proof of work or proof of stake, things like that, and incorporating such technologies behind the CBDC. While CBDCs offer opportunities to reduce costs associated with digital payments, it also comes with risks, particularly related to cybersecurities and unknowns on how it would impact central banks' core functions of monetary policy, financial stability, and payment systems oversight. Now, this is a good point. The CBK currently, their work is to be the bank of banks, meaning that they actually monitor what all the other 42 banks are doing or 40 banks are doing. They monitor what the three payment providers for digital money are actually doing. And then they make policies to make sure that all these people are working. But if you introduce a CBDC, a central bank digital currency, who will manage it? And that's the first question. Do you give it to banks to manage the CBDC, or do you give it to Safaricom to manage the CBDC? Of course, the other two companies will make noise about it. Or does the CBK take care of it? And in all these cases, then laws need to be put in place on how to monitor how this system actually works. This is really important for you to understand. If the CBK decides that it is going to take full control of the CBDC, then who now monitors the CBK and makes sure that everything is going okay with this CBDC? That's really important. And these are questions that they need to actually iron out before this thing is rolled out. The key elements to be considered by CBK before issuing a CBDC are legal and institutional preconditions. Of course, we've talked about this: regulation, governance, and risk management, central bank resources. It's like I read this before. The second thing is a use case for a Kenyan CBDC. The, the biggest risk that I see with the CBDC is, of course, with overreach on finances. But the central bank needs to articulate exactly what will this CBDC be used for. So the CBDC issued by CBK would be a sovereign currency in an electronic form. So it will be the same as having your e-money, but now controlled by the government. And it's a liability to the CBK and an asset to users holding. This is just simple accounting. The most valuable opportunities that encourage issuance would be where a CBDC can support CBK's public policy objectives. I hope we are together up to there. So, one thing that you need to get is the trend that's currently there in Kenya's domestic payments indicate the existence of a digital currency, MPESA, remember, that's what we are talking about here, that is robust, inclusive, and highly active. Therefore, the consideration to introduce a CBDC in the payment systems in Kenya could target cost reduction, interoperability, and enhancing cross-border payments. And we'll go through it, just that's the next thing. Existing proposals indicate that CBDC might hold the potential to achieve much needed interoperability. So, what does interoperability mean? When you are on M-Pesa, you can only send to M-Pesa. There is no interoperability in terms of that you can be able to use the balance that you have on one system, the M-Pesa system, on Airtel Money or Tcash. You actually have to physically do that at an agent. Okay? So the CBDC could come in between and say that I can actually tell you that if you have 1 shilling on M-Pesa, you can actually transfer that 1 shilling to Airtel Money. You can actually transfer that 1 shilling to Tcash. That's where the CBDC would actually work, according to this. So, assuming the central bank charges no fees for CBDC, which it shouldn't, but it has to, because we have loans, we have to pay these people back that we have their money. It would facilitate small value online transactions given relatively low or no associated fees compared to the current payment charges. However, ultimately, mobile payments have a huge potential for growth in Kenya, thereby limiting the opportunities that a CBDC would provide in retail payments. The key consideration is whether to provide CBDC for financial access or to promote financial inclusion more efficiently by ensuring availability of cheap mobile phone financial services. So hear this. This is what the central bank is saying. They're saying that they see or they foresee that when you are dealing with the central bank digital currency, you are directly affecting the business that is going to be done by M-Pesa. That's what they are saying in that statement. They know clearly that M-PESA and Safaricom have actually spent billions to actually set up the systems that they have set up so that people can actually be able to walk 2 meters and you find an M-PESA. Another 2 meters, you find M-PESA. Inclusion is there, that even your grandmother, when she is at the village, she can actually be able to receive money. So when the CBDC comes in, they have a choice. Do they cannibalize the system that is currently there by M-PESA, which M-PESA will not take lying down, which they will raise their issues with the CBDC if that's what its intended use will be? Or do they just come in and say, we want to help interoperability between this service provider and this one, or between banks and M-PESA and Tcash and Airtel Money? But understand, if the CBDC just becomes about that interoperability, it makes no sense. Why should we ever use it? It makes no sense. Okay? So that's what we should understand when we get there. It makes no sense for this to just be used for a very small portion of the financial system. Then when it comes to cross-border payments are inherently more complex than purely domestic ones. As a result, they're often slow and expensive. We've talked about this before. While it's difficult to quantify the benefits, interoperable CBDCs may have the potential to lead to efficiency gains by flattening the multi-layered correspondent banking structure and shortening the payment chains. However, this might require all participating countries to have operational CBDCs. So this is what they're saying. The CBDC itself can be able to help in doing transactions between countries. However, you need for every single country to have an operating CBDC, first of all. And for this CBDCs to actually work together, believe me, that will take a very long time. That I can tell you for free. But before we go on, there is a crypto that's known as XRP by a company called Ripple Labs, which actually is for cross-border payments. Now, it intends to replace the SWIFT system. Remember the SWIFT system, we had talked about it a bit earlier. The SWIFT system is what is intended to transfer from one country to another. It's a layer of banks. It's a bank that is called an intermediary institution. All this come through to make sure that money goes from here to Cambodia in 3 days or 4 days. Or if you're sending money to Japan to buy your vehicle, it takes 3 days because of this cross-border payments and the structure of SWIFT. But Ripple, the currency, or XRP, the currency, is intended to replace this. Okay? So one thing you need to understand is that CBDCs, on one end, they want to be the solution for cross-border payments. But the actual thing is, every country will need its own CBDC in order for this to work under CBDC. But Ripple or XRP, like has just actually been mentioned here in the comments, XRP is the main competitor for all CBDCs because banks can actually buy XRP from Ripple and use that as the gas fees. And they use the Ripple system to actually do cross-border payments instantly at no cost. And they will not need the central bank. They will not need the SWIFT system. So you can see there are already solutions in the crypto space already existing. Okay? So it's just that, of course, kila mwamba ngoma huvuta kwake. Every single person will do something that benefits him. That's exactly what this document is all about. So Kenya's assessment of CBDCs must be focused on potential opportunities and risks, fundamentally given the wide-ranging implications of CBDC to the wider economy. Any eventual decision to introduce a CBDC would involve the government, regulatory authorities, private sector, and engagement with society more generally. And that's the reason why they want us to give our thoughts on this paper. This paper is about 28 pages. I think we are currently on page number 7 or page number 8. That was just a read through of the main part of it, which is just the summary. And there are very many thoughts that we can actually go through. And what I actually want to do, if you would like to ask your question or place your question in the comments, or if you want to join the live stream, you don't have to join with your video on, you can just ask your question. But if you have any thoughts on this central bank digital currency, the floor is open for a few minutes. If we have the questions with us, we can actually be able to go through them, and I will answer a few that I actually can see right now. So this is a very interesting document that every Kenyan should read. Do not let this just go without you reading through. And the pages 8 to 28 is now the full paper, because what I've just read is a summary. The first 7 pages is a summary. That was what we just went through. And allow me to reshare the link, or if you have any questions, just let me know and I'll be able to answer them. So this is a link to join in the live. I'm using StreamYard. It's been a while since I've used it, but we've been an hour online and live right now. But I want to thank you all for joining in. If there is no question, you can probably place your questions in the comments when this video goes up for replay, because I will actually just leave it up on the channel itself so that you can be able to place in your questions. And I hope that you read this document and you put your comments. The comments that I've just placed are my own. I am not a financial advisor. I'm just a normal Kenyan who used to be a banker. So I know just a little more about money, not everything there is. So all this are my own thoughts and my own opinion. So we'll finish with this. And David Onono, thank you for joining us for the stream. And all of you who have joined the stream. CBDCs, the Kenyan government, after realizing the common man is getting richer, they'll raise the taxes, thus discouraging the common man to go further. It is very easy to control the poor man than the rich man. Very, very true. And I hope that the introduction of the CBDC does not discourage you from trying to make your own money. Make your own money, and there will be tutorials that are coming up. There is even a course that I'm about to release this month on crypto, a beginner course for crypto, so that people can actually be able to take control of their finances. In fact, there are places where you put in your money and you get about 20% interest for the year. All these are opportunities that exist outside of the financial space, outside of CBDCs, in the crypto space. That's where the money is. So once this rolls out, because this will be up for the next 3 months, as the central bank will be picking in the thoughts of that people have, and we will be able to actually see exactly what will come forth, the final document, the final implementation. Of course, I'll be here to do tutorials as well if the E-shilling actually comes through, and I hope that I'm paid enough millions, because now I am popularizing that particular word itself. But the biggest question I have, should we move to the digital shilling? Should we move to the e-shilling? Let me know in the comments below. And thank you so much for joining me during this live stream. And I'll see you in the next one.